Thanks to everybody for joining. This is a webinar for current SBIR Phase 1 recipients at the National Science Foundation. We're going to be talking today about the Phase 2 administrative and financial review that will be done to many of you when you submit your Phase 2 proposal in the next year or so. I'm joined here by a colleague from our Cost Analysis and Audit Resolution branch, Mr. Lawrence Dash, who's going to be taking us through the content. I want to point out before I hand off to Lawrence that we're going to be sending everybody who registered for this webinar a follow-up email with a link to the video, among other things, including the FAQ and a number of other web-based resources that relate to this process. So most of the information is going to be contained in one of those documents as well. And with that, I'm going to turn it over to Lawrence.
Good afternoon. This is Lawrence Dash. I'm a senior cost analyst in the Cost Analysis Audit Resolution branch. I'm also the contracting officer representative, so I oversee the CPAs who actually help with the reviews, the financial reviews of your proposals and your packages. Once they do their reviews, it comes back to me. I get the final review of them and make the final decision as far as recommending them for funding or decline or budget cuts. Okay, so the purpose of this session today is to just kind of explain to you guys how this whole financial process works, what you're going to need to do to prepare for it, and all the documents that I'm going to require that you submit. For the reviews that we do, we're going to be looking at 4 basic areas. So we're going to be looking at your financial capability. We're going to be looking at the adequacy of your accounting system. We're going to be doing a full budget review of all your budget items. And we're going to be doing an indirect rate review. And we'll get more into that because that can either go 2 ways. All right, so for the financial capability reviews, what we're trying to see is if your organization is financially viable. So do you have enough resources to perform your daily operating functions? So usually what we request is that you have at least 6 months to a year of revenue on the books that you can cover your operating expenses on your own without the grant funds, because that gives us a reasonable assurance that you're not going to dip into the NSF funds to cover some of your daily operating stuff. So that's one of the main things we look at. And if there's any risk, if we come up with anything, any factor that we think would be negative, that would impact you financially, we're going to look at all those things. So the first thing we require is 2 years of your financial statements. Most of you are startups, and most of you don't have 2 years, so we'll accept a year. Anything less than a year is a little shaky. So sometimes you guys say, okay, we just started, we only have 6 months. We'll accept that, but it makes the review a whole lot more difficult for us because we don't have the history that we need to really get an overall view of what's going on with you. In addition to the 2 years, we need interim financials. So if your fiscal year ends December 31st, if you're using the calendar year, then by the time you get to us for review, you're somewhere around maybe May or June. We're going to ask for interim financial statements from December 31st to carry you through till June. So we want to get it as current as possible so we can get an idea of what's actually happening at the time the review starts. So please have those ready. You don't have a CPA or an external CPA or accountant, please try and get that, because if the financial statements are not prepared by an external accountant or CPA, doesn't give us the level of assurance that we need, because we need somebody that's not affiliated with the company. So we don't want it to be just your bookkeeper doing this. So if you can hire an external accountant to do this, prepare them. If you want to prepare them yourself and get them audited by an outside CPA, that works fine too. When you submit you need to give us a description of the basis of accounting you're using. So either cash or accrual. Accrual is the preferred method because it allows us to capture everything that's going on. So we'll get to see your notes payables, we get to see your receivables, your payables, all that. Cash basis doesn't give us the overall picture. So if you want to use the cash basis, then you can, but then we will ask that you also submit all your adjustments and any other notes to the financials. They will actually tie it to the accrual so we can see everything that's going on. And we also need details of your debt obligations. So whatever loans and things that you have out there, please give us some detail. We want to make sure that you're not obligated to do any paybacks of major loans within the 2 years of the grant, because that would affect your capability also if you've got to actually dip into the NSF funds to pay back a loan that's come outstanding within the 2 years. All right, so if your financial statements are unaudited and you didn't get a CPA, external CPA to do them for you, we'll accept them if you do them yourself, but if you do that, then you have to send in your tax returns. Tax returns need to be already filed with the IRS. You can't tell me, okay, I've got it prepared, but I haven't filed it yet. It needs to be filed and accepted by the IRS, and that way we can use it to reconcile with the financials to make sure that there's no misstatement, in the financials. And the tax return should be for the most recent year that you filed. Give us any other relevant information that you think will help your case. So anything that you think is good, send it all. It's never too much to send. So if you think something will help you, send it. If we don't need it, we'll trash it, but if you have it, go ahead and send it. All right, so some of the things that happen that get you guys into trouble is solvency issues. So if you have negative shareholders' equity, and we see that's been consistent for the last 2 years, that's a problem. If you have a list of all your stock dividends and your details, your repurchase provisions and all that, convertibility provisions, stock options, all that, we ask you for a table so we can see what's going on with that. So please provide that also. Liquidity. If you're not liquid, you don't have enough current assets to cover your current liabilities, or you don't have enough quick assets to cover, and that's an issue. That's one of the main ratios we look at. So we're going to be looking at your current assets over your current liabilities. If that comes out to be less than 1-to-1, a ratio of 1-to-1, that's not good. We also do the same thing for your quick assets, same ratio. So your quick assets would be your current assets, that's your prepaid expenses in your inventory, then that goes over your current liabilities. That ratio should also come out 1-to-1. Sometimes we'll accept 0.09, but usually it needs to be 1-to-1 for us to think that you're in very good condition. All your loans that are outstanding, give us the detail on that, everything that you have, especially the ones that are coming due within the 2 years, because we want to make sure that, again, you're not going to get into trouble trying to pay those loans back while you're spending the NSF funds. And that all ties into your to overall financial capability. Be detailed, though, with the loans. So give me a list of everything that you have, the person that you're owing to, all of that, the repayment details, all of that. We need to see that. If you have any additional investor support out there, give me that too. So if you've got people out there that are willing to give you advances or lines of credit and all those kinds of things, give them to us. As long as they're not coming due within the 2 years of the grant period, we won't count it as a liability. It'll actually be good for you that you get the extra revenue coming in and you don't have to pay back before the grant is over. All right, so if we run into difficulty with your financial capability, these are the additional things we're going to ask for. So we're going to ask you to provide a cash flow forecast for probably 2 years going forward, because you want to cover the grant period. When you do your cash flow forecast, make sure that your assumptions are reasonable. So don't just make up something that's really out there that you know is not going to happen. Like, so you're waiting for, say, approval by the FDA for some kind of medical equipment, and you're not going to be able to actually put it on the market until that happens, and you know it's going to take like maybe 3 years for that to happen. Don't throw that in there and say, okay, well, sales of this equipment will kick in within the next year and count that. So let them be reasonable, because we're going to check all that. We're going to double back and make sure that you guys are giving us stuff that works. Give us all the details again of your additional investments. If you have letters of support, please submit those with your package. The letter should be already signed and dated by the investor or the loaner or whoever, because we want to make sure that's already taken care of. Let us know if you got any new grants or contracts coming in, so we can add that into your revenue pool. Any other financial information that you have to give us will make your position even better. All right, so then we go to your accounting system. So the basic thing is we're looking to see if you have an accounting system that works to handle a federal grant. You have all the requirements, the internal controls in place that will help you accurately account for this grant. So the system has to be a valid system. All right, so it needs to be QuickBooks or QuickBooks Pro or an accounting software. You can't tell me that you've got Excel, and you can't use an Excel spreadsheet, because the system needs to be a system that will have controls in it, that will leave an audit trail. If you go and you make a change or an adjustment whenever, it's there, you can see it. Excel, you can just go in and rewrite it and resave it, and there's no audit trail, so that never works. Must have fund accounting capability, so whatever system you get, make sure that you can set up a fund code or a cost center just for the account, just for the NSF grant, and then run all your costs through there, run all your revenues and your expenses through there, and have it all in that project code or fund code so that it's tracked separately. You also need to be able to track your indirect costs separately, so you need to have an indirect cost ledger also separate from the project cost ledger, and you need to record accurately all of your indirect costs. That would be your general and overhead and maintenance and all those things. Keep those separately. Some people do that in their GL along with their regular operating expenses. That's fine. If you do that, just make sure that within your chart of accounts you set up specific account codes in your chart of accounts that identify these indirects, so that when it's time for you to pull them out, you can segregate them and pull them out. Must be able to generate your financial statement. Okay, so the system needs to be able to do everything. You need to be able to run your queries and do your commands and get your cash flows and your P&Ls and your balance sheets. All that needs to be generated from the system. I don't want to see you sitting down, say the bookkeeper sits down with the adding machine and does it all by hand and then types it up in a Word document. That doesn't work. If we see that, then automatically we say that your accounting system is inadequate and the financial statements cannot be relied upon because they were handwritten or hand-typed, and you're going to probably get a decline. When we're reviewing your accounting system, you need to actually follow some certain rules too. So you need to follow GAAP. Financial statement preparation should be in accordance with GAAP. You need to also tell us what your basis of accounting is. And again, accrual is the preferred method. If you are using the cash or the income tax basis, that will be accepted once again if you provide all the additional adjustments to reconcile to the accrual basis. So let us know ahead of time if that's what you're going to do, because if that's what you do, then we know to ask you ahead of time to submit these additional adjustments. Don't wait until we get the cash one and then things go badly and then you get into trouble. It cuts back. If you give me all this up front, it cuts back on the time it takes to get the review done. These things are also required in the link to the financial policy procedures. There's a list of these things on the very first page. So you're going to need to fill out our financial management systems questionnaire. That's in Appendix 3 of the new awardee guide. Fill that all out. That asks for all the details of your accounting system. Please don't lie on it, because sometimes I get it and I look at it and then what you actually give me and what you have doesn't match. So please be truthful when you fill out the form. We're going to also ask for your Phase 1 project cost ledger. So we're going to ask you to see all the expenses that you've incurred under the Phase 1 project. That gives us an idea of how your accounting system is set up, if you're adequately segregating the costs and all the things that we need to see. Gives us a jump start. If you don't have it set up as a project cost ledger, which means you've got the unique cost center or the unique project fund code, and you're segregating the NSF costs through there, send me a copy of your general ledger, because a lot of you at the Phase 1 level, you don't know about this project cost ledger thing, so you just run everything through your GL. That's fine, but then I would request to see the entire GL for the entire period of the Phase 1. Also, you need to send in a sample of your timesheet or effort report that you're using. If you don't have one, there's a sample out there in my financial policy and procedures that you can use. But before you can get the grant, you've got to show us that you're going to be able to track the effort of all personnel under the grant. You're going to have to use a time card that's compliant. It's going to break it down by different projects. If you're doing 3 hours in a particular project, 4 hours on another, we need to see all that. So if you have them already from the Phase 1, submit those. Also, if you have any prior audits or accounting system reviews by previous agencies that you've gotten funding for, send those in, because then again, that gives us an idea of what we're working with and makes things easier, because then we don't have to be as stringent with you, because a previous federal agency has already done half the work for us. If you have that, please send that in. All right, so then we get to the budget review. When we're looking at the budget, we want to make sure that the budget items are fair and that they're based on actual, supported, and certified cost and pricing data. So everything that you ask for in your budget is going to have to be supported. Everything that you ask for is going to have to be supported. We're going to ask you for the supporting documentation as we go through the specific areas. All your costs need to be necessary to accomplish the project. They need to be allowable, allocable, and reasonable per FAR, and they need to be based on current cost and pricing information. So if you got any of your actual costs from the previous project, you've got invoices, purchase orders, if you can provide catalogs that show the current price or actual vendor quotations from the vendor, supply all of that, especially when it comes to areas like materials and supplies and equipment. Those become very important. All right, so the direct areas that we look at, these are already direct costs: salaries and wages, equipment, travel, materials and supplies, consultant services, subawards. We're going to dig into all of these categories very deeply. Okay, so salaries and wages. So for your senior personnel, you need to provide your actual wage data. So if you have your earning statements or your payroll registers, whatever it is that you have, you need to provide those for all your senior personnel. You also need to supply the standard occupational class codes that you find in the Bureau of Labor Statistics website, because it's better if you do it yourself. If you don't do it, we'll do it for you. If you've got a biochemist, engineer, or whatever, and you find a code that best fits that description, give us that code. If you don't, we're just going to look at it and say, okay, well, bioengineer, close enough, and we'll pick the code for you. It may not always work out to your best interest. When you submit your salary data, we're going to make our recommendation based on either the wage data or the BLS data. So if you show me that, if I look at your earning statements and I see that you've been making $75,000 a year for the last 3 years, whatever, reasonable for you, wasn't an issue, you've been making it all along, it's good, then that's what you're going to get. That's what I'm going to recommend, right? I don't want to see that you've been making $75,000 all along, and then because now you're getting the NSF grant and BLS says that you could be paid $120, that you bump your salary from $75 to $120. Has to be reasonable, so we'll go by either or. If you don't have earning statements and this is like a new position that you're hiring, then yeah, BLS works fine. As long as you got the right SOC code and you can justify it, it works fine. But if you've already been established with a certain wage over the years, keep it reasonable and ask for that. Don't bump yourself up just because you're getting the NSF grant. For all your new employees, again, if you haven't hired them yet, then yes. Use BLS and provide us an explanation of what the person's going to be doing and all that. Give us a copy of their qualifications, their CVs, resumes, all that. We will need to see all that. In no case will we ever go above the BLS mean wage. Never. So you can ask for it. I know a lot of the owners want to get the chief executive rates and all, they compare themselves to the chief executives and all that. That's not allowable. So we're not going to ever give you that. We're always going to keep you to the BLS mean wage, which means 50% of the area that you're living in. And we'll give you a break because we'll look at the 3 different areas. So we'll look at the national, the state, and the metro area for that SOC code. Whichever one comes out best is the one we'll give you. If the metro area is higher than the state, we'll give you metro. National is higher than state, we'll give you national. State's higher than national, we'll give you state. So you guys, just make sure you send in the SOC code and let it be as accurate as possible. For your other personnel, if your requested salary is less than $50,000, we don't ask for any additional information. Whatever you give us in the budget justification will suffice. So if it's already spelled out in the justification what the person's going to be doing, we're good with it. If you don't spell it out in the budget justification, then we'll ask for it. But if you do, you're fine. If the other personnel is greater than $50,000, then yes, you will need to provide all the documentation that we previously asked for under senior personnel. So over $50,000, they go through the same stringent process that the senior personnel go through. And again, most of our reductions in the salary area is because you were being unreasonable and you bumped yourself up or you asked for something that was too high or over BLS or whatever. So just be very careful because we will cut you, and that's one of the areas that gets cut the most. Here's all the info, the BLS website. Again, the CXO titles are not permitted. Salary increases. The NSF cap is 2% per year. So when you submit your budget, salaries can only be escalated by 2% for the second year. Don't ask for 5 or 6 because we're going to cut you back to 2. And don't give yourself huge increases because you know the grant's coming. So because you've been making $75,000 again all along, 6 months before you get the grant, you give yourself a raise in-house to $90,000 so that you can get $90,000 when you apply for the grant. Because when we look at your history, we're going to see all this and we're going to know it happened and we're going to question it, and most likely we're going to cut you. Equipment. So equipment is anything that's non-expendable and tangible, has a useful life of over a year with an acquisition cost of $5,000 or more. That's the bar threshold, $5,000. You can make it lower if you want to, but it doesn't really benefit you to make it lower. But if you want to, it's up to you. You can set it wherever you want to set it. But if you do, when you submit your equipment documentation, tell us what your capitalization threshold is so we'll know. All right? Any equipment that you ask for in the budget needs to be, you need to supply 3 vendor quotes. These need to be authentic quotes. Can't be something you typed up in Word yourself and just stamped it with some kind of letterhead or whatever and sent it in. That happens a whole lot. Please, let it be authentic. Let it be from a real vendor. Let it be from an actual catalog that you can show me, or print out a print screen of the website that shows the prices, or the trade journals, whatever. Those things are accepted, but anything handwritten or done yourself, or just a note saying, yeah, the vendor said he'll do it for this amount, doesn't work. Has to be authentic. If you're going to use a sole source vendor, then you got to justify it and give me the justification, and also give me the actual quote again from the vendor saying that yes, he is willing to do this, and that you solicited him sole source, and we won't have a problem. Travel. So every trip that you ask for needs to be itemized in a schedule. So we need to see where you're going, how long, how much it's going to cost, what your rental car is going to be, all that stuff. Unless it's for the NSF conference, you don't need to support that. We automatically give you the $2,000 per person for up to $4,000 per year. So nothing's required for that. Anything else, if you're going foreign travel, domestic travel, wherever you're going, give us an itemized schedule so that we can see it. Remember that first class and business class for airfare is not allowable. Per diem above the GSA per diem rates are also not allowable. So make sure you check the GSA website when you're doing this, when you're planning, and make sure that you adhere to those rates, because if you come in over, we're going to cut you. Materials and supplies. Again, another itemized listing is required. Give us the description, the vendor, the quantity, the unit price, the extended price. Want to see everything. Those source purchases, again, need an authentic vendor quote. This is important here. So I need you guys to avoid conflicted vendor arrangements. So this is something I see all the time. You're a small business, you have a subsidiary, or you have a sister company or something, and you say, oh, we're going to buy the materials from our subsidiary, or we're going to buy from our sister. That's not work. That's conflicted, and we're going to disallow all the costs. So make sure you go out, do your bidding outside of your internal structure so you avoid all the conflict. Materials and supplies, over $5,000, we're going to need actual vendor quotes. Anything under $5,000, the itemized listing suffices. But anything over the $5,000, we need the actual vendor quote, just like we need for equipment. And then again, do not classify equipment items as materials and supplies. So anything that fits the equipment description with the useful life and all that over $5,000, put that in equipment. Don't put that in supplies, because then we have to take the time to cut it out and reclassify it for you. And that doesn't make us happy. So just make sure you keep them separate. Consultant services. The consultants that you propose you're going to need to provide an actual contractual agreement for these people. I know sometimes you guys say, okay, well, I haven't hired the person yet. They're not going to sign until they start working. Not an issue, not a big issue. If you can at least get a letter of intent or something from them that's signed saying, yes, I am willing to take on the role as consultant to perform these duties starting on this day for this rate of pay, whatever, that suffices. If you can get the actual contract, though, between both parties with both signatures ahead of time, I would prefer to get that. But if you don't have that, the other things work. Make sure all these things are listed, and whatever you give me, whether it's the contract or just the letter of intent, make sure the services and period of performance and all that, the rate of pay, that's listed. For each consultant, you also need to provide the consultant's qualifications to do the work. So send a copy of their resume or CV or whatever it is that they have. The rate of pay shall not exceed $600 per day. So based on an 8-hour day, that would be $75 an hour, $600 a day. Cannot exceed that. If you exceed that, we're going to cut you back to the $600. And again, conflicted arrangements need to be avoided. Don't hire your cousin and say, okay, she's got a degree in bioscience and she's about to graduate university, so she's going to be my consultant. No. You want to make sure that your arrangements are non-conflicted. Go out, put it out, bid it, advertise it, whatever it is that you need to do, and get the qualified person. Don't hire, okay, well, my wife did this part-time so she can do it. We don't want to see that, because we're going to cut it and disallow it, and you won't get a second chance to redo it once we get it. So just avoid conflicts. Subawards. So you already provide your subaward proposal in the budget, so we have that. And that usually gives us a pretty good idea of what's going on. But in some cases, it's not that clear. So we will ask you to provide a statement of the relationship between the small business and the sub, because again, we don't want conflicted arrangements. You cannot sub as the owner of a company. You can't sub to one of your employees, or you can't sub to one of your subsidiaries, and anyone who is an employee of your small business cannot receive a subaward from you. That's totally illegal according to federal regulations. So if we see that, we're going to disallow the entire subaward. No questions asked. Give us a description of how you found the subaward, how you solicited it. If you did the 3-bid process, tell us that. If you just put out a sole source bid, whatever, tell us that. If it is sole source, give us the justification. And that suffices. Give us an analysis of your budgeted cost for the subaward so we can see the reasonableness of it. Again, though, if you have all this spelled out in detail in your proposal, in the proposal's budget, and it's all justified, you're good. If it's not, we're going to ask you for this. And we're going to ask you to provide documentation to support all of your budgeted cost categories if we feel the need to. Not something we usually do, because we don't get that deep into the subawards. We assume that you've taken care of it yourself, since you're the prime, and you're going to be monitoring them. But if we see any issues, we have the right to dig, and we will, and we'll ask you to supply everything to support every cost that you ask for. The subaward is asking for indirect costs. They can use their federally negotiated rate if they have one. Mostly the universities have them with the HHS. Some of the nonprofits have, most of the nonprofits have them with various agencies. If they have that, please provide it. If I see in the budget they're asking for 75% and there's no rate provided, then we're going to ask, well, how are you justifying this? If you can't justify it and provide us with this, then we're probably going to just cut you back to the safe rate of 50%. And the overall rate that anyone can get, you or the subs, is 150% of total salaries and wages. So none of you can go over that. So even if you have, say, a university with a rate agreement that's official from DHHS, when we do the math, if the rate that they're asking for with their rate agreement works out to be more than 150% of total salaries and wages, we're going to cut them back to the 150%, because that's the cap for both you, the small business, and for the universities. Okay, so your indirect cost rate. Safe rate, easiest thing for you to do, 50% total salaries and wages. No supporting documents required, nothing. Just put it in the budget, do the math correctly, and you're good. If you're asking for more than 50% of total salaries and wages, then you're going to need to supply an indirect cost proposal. It's going to have to be very well done. It's going to have to be accurate. It's going to have to be based upon your last year of incurred cost data. You're going to have to put everything, indirects in your indirect cost pool and in the direct base, and make all your adjustments and do all of that. If you do have to do that, I have a sample online that I will send you, simplified allocation methodology that you can follow. That's the simplest way to do it. You'll get all that done, you'll send it in to us. When you're doing this, make sure that you're reconciling all the costs that you're going to ask for. So your total cost in the indirect proposal needs to reconcile with your financial statements. Okay, so if your expenses in your financial statements say $2.5 million, and then your total cost in the indirect only say $1.5 million, you didn't do it correctly. And if we have to do it, then we'll redo it all ourselves. We'll redo the calculation, redo everything, reallocate things the way we see fit, and most times you'll come out with a much lower rate. If you choose to go this route, make sure that you take the due diligence and you do it correctly so that things come out as close as they need to come out. And again, you can't exceed the 150 total salaries and wages just like your subs. These are the certain things that we don't allow, that we make adjustments for. So IR&D costs are not allowable as indirect costs. We would want them to be classified as direct costs. So if we see them, we're going to pull them out of your pool and we're going to reallocate them to the base. Patent and patent-related expenses are unallowable totally, pool and base, direct or indirect. The additional unallowable indirects are as follows: sales and marketing, business development, manufacturing, production. If we see those again, you'll pull those out. Indirect salaries in excess of 35% of total salaries and wages. Those must be allocated as direct costs until they go into the base. Subcontract costs are unallowable, totally, we'll pull that out. Equipment costs are unallowable, we'll pull that out. Facilities capital cost of money is unallowable. So, if this is a problem for you, then don't buy the equipment yourself. Put the equipment request in your budget. Because if you buy it yourself, you're not going to get the facilities capital cost of money. You're only going to get the depreciation in your indirect cost pool if you submit a full indirect rate negotiation. So then that's just money lost to you. So if you don't want to have to deal with that and you want to use the funds, in a different area that would better serve the company, just don't buy the equipment, and just whatever equipment you're going to need for the grant, just put it in your budget and ask for it. And most times, Ben will give it to you, so that's not a problem. All right, so if you, as the small business, have a federally negotiated rate from another agency, you can request that. We'll accept that. If you got one from DOD or wherever, if you had a previous contract, whatever, you can request that. However, keep in mind that all the NSF adjustments that we just went through that are unallowable, we're going to make those adjustments to the rate. So it's always going to come down. Right? So even if DOD gave you 95%, whatever, once we make all those adjustments for the NSF unallawables, it's going to come down. All right. So if you want to avoid all of this, just take the safe rate, 50%. So make sure that your fringe costs and then your indirect, which would be your G&A and your overhead, add them together, do the math. If they come out to 50% or less of your total salaries and wages, you're good. All right. Again, make sure all your costs, the indirect pool, your base, everything's compliant with the requirements. Look at the requirements in the financial policies and procedures link that your program officer sends you in the beginning with the initial email, and follow that very carefully, because everything that you need to do is going to be in there. Alright, so once the review is done, this is what happens. Either I will recommend that the award gets paid at the full amount, or I'm going to recommend that it gets cut with reductions, or I'm going to recommend that it's declined based on whatever reason, whether it's your financial viability or whatever, your financial statements are totally misstated and cannot be relied upon, or your accounting system is inadequate. Whatever the reason is, it's going to be the reason, and you're going to be declined based on that reason. All right, so the process for CAAR starts approximately 3 to 4 months after you submit your initial phase 2 to the program. Once program does their thing and the review panels, whatever, they will send you an email saying that your proposal has been recommended for funding. It's going to be going to CAAR for the financial review. At that time, they'll give you 10 days to submit the package to me. Please adhere to that 10-day deadline, because we have to move pretty fast. So once we get it in, once you send in the package, I only have 10 days for my CPA to review it, and then I only have a couple days to review their work and get it to the Division of Grants and Agreements to get it paid. So please be timely with this. When your program officer asks for it, send it in within the 10-day deadline. Don't let my assistant Donald have to call you or email you 10 times saying, hey, I haven't gotten this package from you and it was due last week. Also, once you get that email, this is very important. We've been running into a lot of trouble with this. Once you get that email from your program officer, do not submit any more revised budgets through FastLane, please. Because what happens if you do, at that time, when I get that email from the program officer and I pull down the budget that's in FastLane, that's the budget I'm putting together in your financial package. That's the budget I'm sending to my CPA for review. And then halfway through the CPA's review, I get a call from you saying, oh, your CPA just called me because he's doing my financial review, but he has the wrong budget. I submitted revision number 4 last week. That's not acceptable. In the past, we've been doing it, and I've been going back and causing myself heartache and pulling up the revised budget. Not going to happen anymore, guys. So from this point, do not submit any more revised budgets. If you have to, get it approved by your program officer. Tell the program officer you need to do this because it's urgent. The program officer will contact me, and if things are at the point where I can still do it, then it won't be a problem. Most times it happens too late when the review is already halfway done, and then we got to go back and review everything based on this revised budget. So please, no revised budget. Once you send in the package, the round lasts for about 8 weeks. Individually, the review takes about 3 weeks, so my CPAs will have it for 2 weeks, and then I'll have it for about a week. So individually, it takes about 3 weeks. The entire cycle lasts 8 weeks, though, so if things fall behind at any time within the 8 weeks, you'll be called up by the CPA asking for information or whatever. And please get the information in to the CPA as fast as you can, because that helps us to keep things moving so we can get them paid for you on time. Talk to your PD and call CAAR as often as you want to. Do it early before the time comes, and don't call me up at 5 o'clock saying, oh, Lawrence, I have to submit my package by midnight tonight, and I have all these issues that I need you to help me with. Do it early. Give yourself enough time, because then you stress yourself out and you stress me out. Find a good accountant or a CPA to do all the financial stuff for you. Bookkeepers are fine, but they don't necessarily know as much as they need to when it comes to all this stuff. So if you've got a bookkeeper and they can handle it, that's fine. But getting a good accountant or a CPA is always the best way to go, because they're familiar with all the federal requirements and all that, and they can actually do a better job for you. FAQs are at this website, so you can go check that out. The financial review info that I've been talking about that I need you guys to follow for the financial package is here at the BFA, CAAR, SBIR, REV, JSP. Okay? This is my contact info, my email. Our CAAR financial website where you'll find samples for the indirect rate submissions and things like that are here at the CAAR website. And then our FAQs